My mother called me at 6:17 on a Tuesday morning. She did not say hello. She said someone was trying to take her house. For a few seconds, I thought she had misunderstood a collection letter. My mother, Eleanor Hayes, was 74 years old. She had lived in the same brick house outside Richmond, Virginia, for 29 years. My father had paid off the mortgage 6 months before he died. There was no bank loan, no second mortgage, no unpaid property tax. The house was hers. Then, she read the heading on the letter. Notice of Intent to Enforce Association Lien. The balance claimed by Willow Creek Estates HOA was $23,740. It had started with her garden. Not a collapsed roof, not an abandoned car, not a dangerous structure. Her garden. My father, Martin, had planted most of it. 2 dogwoods, 3 old rose beds, a row of azaleas along the porch, a fig tree near the side fence, and hydrangeas that had grown wider every summer for almost 20 years. After he died, Mom still maintained the property, but she stopped pruning everything into perfect geometric shapes. The roses grew taller. One azalea spread over the edge of a mulch bed. A patch of black-eyed Susans reseated itself beside the mailbox. To Willow Creek's new HOA president, Brenda Carlisle, that meant one thing: landscape deterioration. The first notice carried a $100 fine. Then came $250. Then $500. Then daily penalties, inspection charges, administrative fees, attorney fees, and collection costs. By the time Mom realized how serious it had become, an original landscaping dispute worth less than $1,000 had been transformed into a claimed debt of almost $24,000. And the HOA wanted to enforce a lien against a mortgage-free home worth more than $430,000. I drove over before work. Mom was sitting at the kitchen table with every notice arranged in date order. That was how my father had taught her to handle paperwork. Never throw away something you might need later. I read all of it. One sentence bothered me more than the dollar amount. If the balance remains unpaid, the association reserves all remedies available under its governing documents and applicable law, including foreclosure of its lien interest. Mom asked me whether they could actually sell her house over flowers. I told her I did not know yet. That was the only responsible answer. My name is Claire Hayes. At the time, I was Director of Revenue Administration for the county. That sounds like the kind of title that can make a story dangerous very quickly. I oversaw divisions dealing with local tax administration, business filings, assessment coordination, delinquent accounts, and compliance referrals. But I could not use that office to punish people who upset my mother. And I would not. So before making another phone call, I emailed the County Ethics Council. I disclosed my mother's HOA dispute. I requested written recusal from any county tax matter involving Willow Creek Estates, its officers, or any business that might emerge from the dispute. Then I called a private attorney. His name was Daniel Mercer. Daniel told us not to pay the lien demand and not to assume it was valid. He wanted the declaration, the fine schedule, every notice, every hearing record, every photograph, and every vendor invoice that had been added to Mom's account. The last item seemed strange, but then we found it. Willow Creek had charged my mother $2,850 for corrective landscape remediation. According to the ledger, Greencrest Property Services had performed work after she failed to cure violations. Mom stared at the invoice. No landscaping company had ever worked in her yard, and her cameras confirmed it. Nobody from Greencrest had entered the property. Yet the HOA had billed her $2,850 for work that apparently never happened. Daniel searched the company. Greencrest Property Services was registered to an address owned by the HOA treasurer's brother-in-law. Then we found 4 more Willow Creek vendors tied to board members or their families. That was not automatically illegal. Related party vendors can be legitimate, but several companies appeared to have no employees, no commercial offices, and inconsistent business filings. Daniel told me something very specific. Do not touch this through your office. I agreed. Instead, he prepared a preservation letter and requested the HOA's financial records under the association documents and applicable law. 2 weeks later, Willow Creek produced a partial vendor ledger. Daniel noticed payments that did not match publicly available business registrations. An independent CPA reviewing the records found reimbursements coded one way in HOA books and reported differently in public filings. That was the point where the matter stopped being just my mother's foreclosure case. Daniel submitted a documented referral through the same compliance channel any citizen could use. Because of my recusal, it bypassed me completely. The county ethics attorney assigned the matter to an independent audit manager. That manager reviewed the referral, then expanded it. Not because my mother was a widow, not because I was a county director, but because the records showed enough inconsistencies to justify looking backward. 3 years, then 6, eventually 10. And what began as an HOA trying to take an elderly woman's home over an unsightly garden was about to force every current board member involved in those vendor arrangements to explain a decade of payments, reimbursements, related businesses, and tax filings to auditors who had never met my mother. My parents bought the Willow Creek house in 1997. Back then, the neighborhood was only half finished. There were no mature trees along the sidewalks. The clubhouse was a sales office. The retention pond looked like an excavation pit. Dad liked the lot because the backyard caught morning sun. He was an electrician by trade, but gardening was the thing he did when he wanted to stop thinking about work. He planted the first rosebush beside the back steps, then another, then another. Every anniversary, he added something. A dogwood for 25 years of marriage. The fig tree after my brother had his first child. Hydrangeas after Mom retired from teaching. By the time I was grown, the yard had become a living calendar of our family. Dad never designed it to look like an HOA brochure. It had curves, different heights, and plants that flowered at different times. Some years the roses were magnificent. Other years Japanese beetles destroyed half the blooms. That was a garden. After Dad died from a heart attack at 72, Mom changed. She was still independent, still drove, still cooked for herself, and still volunteered twice a week at the library. But the yard became harder. She hired a teenager down the street to mow, and a local gardener came twice each spring to mulch and prune the larger shrubs. Mom handled the roses herself because she did not trust anyone else with them. For 28 years, Willow Creek never considered that property a problem. Then Brenda Carlisle became president. Brenda had moved into the neighborhood only 4 years earlier. She was efficient, energetic, and obsessed with what she called visual consistency. She pushed owners to replace faded mailbox posts. She created seasonal inspection teams. She hired a new management company. She persuaded the board to increase enforcement frequency from quarterly drives to monthly inspections. At first, residents liked the attention. Common areas improved, the pool furniture was replaced, and entrance landscaping looked better. Then the notices started multiplying. A trash can visible for 2 hours after pickup. A driveway with oil stains. A faded basketball hoop. A vegetable trellis visible above a fence. And then Mom's garden. The first letter said, "Shrubs required trimming," and Mom trimmed them. The next letter said, "The front planting beds lacked uniform edging," so she added edging. Then the board complained that her roses extended beyond the approved ornamental area. There was no approved ornamental area shown on her lot plan. Mom asked for clarification, and the property manager sent her a page from the current landscaping handbook. That handbook had been adopted by the board 2 years earlier. Daniel would later discover that several enforcement provisions in it went far beyond the older declaration. But Mom did not know that. She saw the HOA logo and assumed it was binding. and she tried to comply. That was how they kept moving the target. 1 month it was shrub height, then plant density, then dead wood in the dogwood, then uncontrolled volunteer vegetation beside the mailbox. That phrase referred to black-eyed Susans, which Dad had planted the first ones 15 years earlier. Mom paid the first $100 fine because she was embarrassed. She paid another $250 because the property manager told her it was easier than requesting a hearing. Then she stopped paying. Not because she wanted a fight, but because she realized every time she fixed one thing, another violation appeared. I had seen some of the letters, but Mom had hidden the worst of them from me. She knew my job, and she did not want anyone saying her daughter used county government to solve a neighborhood disagreement. That concern turned out to be more important than she understood. If you have an elderly parent living alone under an HOA, there is a practical lesson here. Ask them to show you certified letters, lien notices, or legal demands as soon as they arrive. Pride and embarrassment can turn a manageable dispute into an expensive one simply because nobody sees the paperwork early enough. And if you have ever watched an HOA turn ordinary landscaping into a growing pile of fees, tell me in the comments where you think reasonable maintenance ends and harassment begins. Share this story with someone caring for an older homeowner, because a violation notice should never be ignored just because the original issue seems small. Mom did not want special treatment. Neither did I. What we wanted was very simple: a fair accounting, a valid rule, a proper hearing, and an explanation for how rose bushes had somehow become a $23,740 threat against a widow's paid-off home. Daniel reconstructed the balance from the beginning. It took him 3 days. The first actual landscaping fines totaled $1,350. Everything after that was escalation. Daily penalties, repeat inspection charges, certified mail charges, administrative processing, attorney review, and collection referral. Then the $2,850 Greencrest invoice. Another $1,900 appeared under emergency ground stabilization. Mom had never heard of it, and her backyard camera showed no contractor on the date listed. Then there was $740 for debris removal. The supposed debris was never identified. We requested photographs, but nothing came. The HOA eventually produced an inspection photo showing 2 paper lawn bags near Mom's garage. They belonged to her. She had filled them with clippings and put them out the evening before county yard waste collection. They were gone the next morning. The HOA had still billed debris removal. Then Daniel reviewed the hearing history. This was worse. The declaration required notice and an opportunity to be heard before certain fines became final. Mom had requested a hearing twice. The first was postponed by management. The second was listed as owner failed to appear. Her email showed the HOA had changed the time that morning. Mom arrived at 6:30, but the meeting had been moved to 5:30. Nobody called her. The board upheld the fines anyway. That became a due process problem. Then we found the attorney fee issue. The HOA had added nearly $7,000 in legal costs before any foreclosure filing existed. Some of those entries were generic block charges with no detail. Daniel did not assume they were fraudulent. He requested the invoices. The HOA resisted, and that resistance became part of the litigation strategy. Meanwhile, Brenda increased pressure. Mom received a letter offering what the board called a final resolution. If she removed the roses along the side of the house, replaced the front garden with an approved landscape package, and paid $14,000 within 10 days, Willow Creek would waive the rest. The proposed replacement plan was attached: 6 boxwoods, 3 dwarf hollies, and mulch. No flowering border. No fig tree was shown. Mom read the page twice, then she folded it carefully and put it on the table. She told me that if they wanted Dad's garden gone, they would have to prove they had the right to make her remove it. That was the first time I saw anger replace fear. Daniel sent a formal dispute letter. He challenged the debt, demanded the foreclosure process stop, requested a complete accounting, requested proof of every contractor charge, and warned the board that attempting to enforce a disputed lien, built partly from unsupported vendor charges, could expose the association to significant liability. Brenda did not slow down. At a board meeting, she described Mom as a chronic violator whose property had reduced neighborhood standards for years. One resident recorded the meeting, and we heard the audio later. Brenda said allowing one owner to ignore landscaping requirements would destroy enforcement credibility. Then another board member asked whether foreclosure was really appropriate for a 74-year-old widow. Brenda answered that rules only work if consequences are real. That sentence spread through Willow Creek. Some residents supported her, while others were horrified. Mom became the woman people whispered about at the mailbox. The garden became a symbol, exactly the kind of attention she hated. Then Daniel filed for temporary relief in court to stop any foreclosure action until the disputed charges and lien validity could be reviewed. The judge did not decide who was ultimately right, but the association agreed not to schedule a foreclosure sale while the challenge was pending. Mom could sleep, for the moment. That was when we turned to Greencrest. The company's invoice contained a tax identification line and business address. Daniel searched public records. Greencrest Property Services, LLC, had been formed 9 years earlier. Registered agent, Samuel Carlisle, Brenda's brother. The company had received more than $310,000 from Willow Creek over 9 years. Again, family ownership did not prove wrongdoing. But the HOA's conflict of interest disclosures did not list the relationship. Then another vendor appeared, Blue Haven Administrative Consulting, registered to the home address of Treasurer David Knox. More than $86,000 in payments, over 7 years. Purpose listed in HOA records, records modernization, compliance support, vendor coordination. Some payments were issued directly to David, while others went to the company. Then a third entity, Commonwealth Inspection Services, owned by the adult son of another board member. It had billed Willow Creek for exterior property inspections, including Mom's. Daniel brought in forensic CPA, Rebecca Sloan. Rebecca's first rule was the same as mine. Do not call something fraud just because it looks ugly. Trace it. So she did. Bank statements, vendor invoices, corporate registrations, board minutes, disclosures, and tax records available to the public. The more she traced, the less the arrangement looked like normal contracting, and the foreclosure threat against Mom began to look like the loose thread that might unravel years of decisions nobody expected homeowners to examine. Rebecca found the first hard discrepancy in Greencrest's equipment records. The company billed Willow Creek for commercial landscaping services, trucks, trailers, mowers, sprayers, equipment surcharges. Yet county business property filings associated with the company appeared inconsistent with the scale of equipment reflected in its invoices. That could have innocent explanations. Leased equipment, subcontractors, reporting categories, different ownership structures. So we did not jump to conclusions. Rebecca simply documented the mismatch. Then she found payments described by Willow Creek as reimbursements to board officers. Some appeared tied to legitimate purchases. Others lacked receipts. Several recurring amounts flowed to Blue Haven Consulting, while David Knox simultaneously served as treasurer. The association's financial statements categorized many of those payments as ordinary management expenses, while public business registrations suggested Blue Haven had minimal independent operations outside Willow Creek. Then there were 1099 questions. Again, that did not mean taxes had been evaded. It meant a tax professional needed to compare actual payment records with reporting requirements. And that was exactly the point where I could no longer be anywhere near the government side. My recusal memorandum had already removed me from authority over any matter involving Willow Creek and identified related entities. When Daniel submitted the citizen referral, it went to an intake manager who reported through a different chain. I did not see the file, I did not assign an auditor, I did not approve an audit period, and I did not receive internal updates. At work, if Willow Creek came up, I left the room. That was not theater. It protected Mom, because Brenda's attorney quickly claimed the tax referral was retaliation. The county produced my recusal record. It showed I had stepped away before the referral was made. Then the county audit unit did what audit units do. It evaluated jurisdiction. Some issues belonged to local business tax administration. Some potentially belonged to state tax authorities. Some were purely HOA governance, and some might turn out to be nothing. County staff issued document requests to relevant businesses. The audit period initially covered 3 years. Then auditors found older transactions with the same patterns, and the period expanded. 5 years, 7, finally 10. The phrase, 10-year audit, became neighborhood legend, but the reality was more precise. No one simply audited every board member's entire private life because they annoyed my mother. Auditors reviewed specific taxable activities, related party businesses, compensation, reimbursements, filings, and associated records where legal retention and assessment rules permitted. Some matters were referred to state revenue officials, and others remained local. That distinction mattered. What made the situation explosive was not my title. It was the paper trail. One vendor had reported less business activity than HOA records appeared to show. Another had equipment listed in invoices that required reconciliation with property filings. Several board-related payments needed to be classified correctly. A decade of transactions now had to be explained. Meanwhile, Daniel kept working on Mom's case. A licensed arborist inspected the yard. Healthy. No dangerous trees. No invasive growth requiring county action. No blocked sidewalk. No sight distance issue. A landscape architect compared Mom's property with the recorded Willow Creek covenants. The declaration required lots to be maintained in a neat and attractive condition. It did not require every plant species shown in the current handbook. It did not ban mature rose beds. It did not authorize the board to replace a homeowner's landscape merely because a newer board preferred uniform shrubs. Then we compared enforcement photographs from other homes, which became another problem for Willow Creek. Several board members had landscapes that technically violated the same handbook provisions. Ornamental grasses above the allowed height, shrubs extending beyond beds, non-approved flowering vines. No fines. Selective enforcement is a complicated legal issue, but inconsistent treatment made Brenda's position harder to defend. Then came the Greencrest invoice for Mom. Rebecca examined the invoice metadata. The document had been created 11 days after the date it claimed work was performed. The line item said, "A 3-person crew spent 6 hours on site. Mom's cameras covered both gates." No crew arrived. Greencrest's GPS records had not yet been produced, but the owner eventually admitted through counsel that the invoice was generated from a standard corrective work template after the HOA sent a list of properties. His company had not actually entered Mom's yard. The supposed $2,850 remediation charge was invalid. That was the moment Daniel stopped talking about reducing the lien. He demanded it be released entirely. Because once unsupported vendor charges were mixed into the foreclosure balance, Willow Creek had a much larger credibility problem. Brenda still refused. She said one incorrect invoice did not erase years of landscaping violations. Daniel agreed. Then he asked her attorney a simple question. How many other homeowners had been billed from the same template without work being performed? Nobody answered. The tax audit had started with business filings. Now the HOA needed its own internal audit too. The turning point came at a mediation session 9 weeks after Mom first called me. Willow Creek brought Brenda, Treasurer David Knox, the property manager, association counsel, and their insurance representative. Mom brought Daniel. I attended as her daughter, nothing more. Before the meeting started, Daniel made that clear on the record. Claire Hayes, is appearing solely in her personal capacity. She has no role in any governmental review involving this association. The HOA attorney acknowledged it. That sentence removed the favorite distraction. Now everyone had to deal with the documents. Daniel began with the lien, original fines, daily assessments, unsupported contractor charge, disputed attorney fees, defective hearing record, no contractor entry, no valid remediation work. He demonstrated how the $23,740 number had been constructed. Then he placed the camera timeline beside the Greencrest invoice. No truck, no crew, no work. The insurance representative asked why the charge had been added, and the property manager said the board provided a list of uncured properties to Greencrest. Greencrest later returned invoices. Daniel asked whether anyone verified the work. No. Then the insurer asked how many other accounts contained similar charges. No one knew. That was bad enough. Then Daniel turned to the garden itself. He displayed photographs from the last 3 years. Mom's yard was not abandoned. It changed seasonally. Winter pruning, spring blooms, summer growth, autumn cleanup. A gardener's invoices showed regular maintenance. The arborist found no safety hazard, and the county had never cited the property. The HOA could prefer a different look, but that did not automatically justify a foreclosure-level debt. Then Willow Creek's attorney raised the obvious subject, the tax audit. He accused Daniel of leveraging government pressure to force settlement. Daniel did not argue. He slid my ethics recusal across the table, dated before his citizen referral, then the independent intake acknowledgement, then a letter from County Ethics Council stating that I had no supervisory, advisory, or decision-making role in the matter. Daniel explained that neither he nor I could stop the audit now, even if Willow Creek settled that afternoon. The referral had been accepted independently, and the records determined what happened next. Brenda looked at me for the first time in nearly an hour. She asked whether I knew how far back auditors were looking. I told her the truth. No, I was recused. Then David Knox spoke. He wanted to know whether reimbursements to board members counted as taxable compensation. I said that depended on facts, and that he needed his own tax attorney. I was not answering tax questions for someone involved in a matter from which I had formally withdrawn. The insurance representative looked deeply uncomfortable. Then Willow Creek's counsel requested a break. When they returned, the tone changed. They offered to remove the Greencrest charge, reduce the fines, and waive some legal fees. Mom would still owe $6,000. Daniel declined. He said the problem was no longer arithmetic. The association wanted my mother to pay thousands of dollars to validate an enforcement process we had just demonstrated was unreliable. Mom finally spoke. She had been quiet most of the day. She said she had spent nearly 30 years in that house. She had buried her husband from that house, and she had paid every assessment, every property tax bill, every legitimate debt. She would not pay $6,000 to make a false lien disappear. Then she said something Brenda could not answer. If you were so sure my yard was worth taking my home over, why did you have to bill me for work nobody did? Silence. The insurer requested another recess. The next offer was very different. Complete lien release. All landscaping fines withdrawn. All collection charges removed. Mom's attorney fees substantially reimbursed. No foreclosure action. The HOA would use an independent landscape professional to establish any future specific maintenance requirement rather than demanding wholesale replacement. The board would also commission an audit of corrective work invoices across prior owner accounts. Daniel added one more term. The garden handbook could not be enforced against Mom beyond what the association actually had authority to require under the governing documents. Agreed. Mom accepted. Not because Willow Creek had been destroyed, but because her house was safe. That should have been the end. But the financial records kept moving without us. 3 weeks later, Greencrest received additional document requests. Then Blue Haven, then 2 board members, received notices related to specific reporting questions. Another matter went to state tax authorities. For the first time, residents understood what had actually happened. I had not triggered a 10-year audit by snapping my fingers. The HOA had generated records. Daniel found inconsistencies. A CPA documented them. A normal citizen referral was filed. Independent auditors decided the scope, and the board members who had spent years demanding perfect paperwork from homeowners now had to produce their own. The lien release was recorded 11 days after mediation. Daniel drove Mom to the county recorder's office himself. She insisted on getting a certified copy. When she came home, she placed it in the same metal document box where Dad had kept the mortgage satisfaction letter. Then she called me. For the first time in months, she sounded like herself. The house was no longer at risk from the HOA claim. Willow Creek still had work to do. The board hired an independent forensic accountant. That review found 14 homeowner accounts containing Greencrest corrective work charges requiring verification. 9 were supported, 3 were partially supported, 2, including Mom's, could not be substantiated. Credits were issued. Then, the related party contracts were reviewed. Some were legitimate. That is important. Not every check written to a relative is corruption. Greencrest had performed real common area work for years. The problem was inadequate disclosure, weak controls, inconsistent invoices, and questionable classification of certain payments. Blue Haven was more difficult. The treasurer's consulting company had received recurring payments without the kind of independent procurement process residents expected. Several payments had to be reclassified, and tax professionals corrected filings where necessary. Auditors calculated additional taxes, interest, and penalties on specific underreported or misclassified amounts. The final amounts were nowhere near the fantasy numbers residents repeated online. Nobody owed millions, and nobody was marched from the clubhouse in handcuffs. Reality was less theatrical and more damaging. Amended returns, back taxes, interest, professional fees, vendor repayments, insurance disputes, legal bills, resignations, and reputations destroyed by documents. David Knox resigned as treasurer before the financial review finished. Another board member whose son owned an inspection company stepped down from the compliance committee. Greencrest lost the HOA contract. The management company was replaced after residents concluded its controls had been too weak. Then there was Brenda. She initially refused to resign. At a packed special meeting, she defended the landscaping program, saying Willow Creek had needed stronger standards. A resident asked whether stronger standards required threatening an elderly widow's home with unsupported charges. She said the board had relied on professional advice. The property manager reminded everyone that the board had approved the escalation. Then another homeowner asked how many dollars Willow Creek had spent pursuing Mom. Legal defense, collection costs, mediation, forensic review, insurance deductible. Nobody could give an exact number that night, which made the room angrier. Then Daniel's settlement summary was discussed. The lien balance had been zeroed, the foreclosure threat was gone, Mom had received fee reimbursement, and the garden remained. Residents began asking why the case had ever reached that point. Brenda returned to the idea of consistent enforcement. A man in the second row answered her. Consistency is not the same thing as accuracy. That line ended the argument. A recall petition began the next morning. Brenda resigned before the vote. The new board president was Susan Patel, a retired hospital administrator who had spent her career building compliance systems. Her first month was extremely boring. I mean that as a compliment. Every vendor relationship was disclosed. Competitive bids were required above a set amount. Related party transactions required independent review. No contractor charge could be placed on an owner ledger without completion evidence. Fine notices had to identify the exact covenant provision. Hearing dates could not be changed without documented notice. Foreclosure referrals required outside counsel to certify that the underlying balance had been independently reviewed. The garden handbook was rewritten too. No more vague phrases like visually harmonious planting. Maintenance standards became measurable. Dead trees, blocked sidewalks, noxious weeds where applicable, vegetation interfering with drainage, actual conditions, not whether Brenda personally preferred boxwoods to roses. The government audits continued on their own timelines. Some questions went back 10 years, while others did not. Several related entities amended filings. The county collected additional amounts where legally due, and state authorities handled matters within their jurisdiction. I learned about final outcomes only when they became public, or when Mom's attorney received information relevant to the HOA case. That was exactly how it should have worked. The most satisfying result was not watching someone get a tax bill. It was watching the system become boring again. No favors, no vendettas, no daughter with a government title punishing her mother's enemies. Just records being compared with records, and people finally being held to the same standard of documentation they had demanded from a 74-year-old widow. The following spring, Mom's roses bloomed harder than I had seen in years. Maybe that is just how I remember it. The red climber beside the porch reached nearly to the window. The dogwood was covered in white flowers. Black-eyed Susans came back along the mailbox, and the fig tree survived another winter. Mom did make changes. She hired a gardener to thin 2 overgrown azaleas. One dead branch came out of the dogwood. The edging was repaired, and a section of mulch was replaced. Reasonable maintenance. Less than $900 total. That was all the yard had needed. Not $23,740. Not a lien. Not a foreclosure threat. Not 6 boxwoods replacing 30 years of family history. Susan Patel, the new HOA president, came by one afternoon while Mom was pruning roses. She did not bring a violation letter. She brought the corrected account statement. 0 balance, no lien, no collection status. Then she asked Mom whether the neighborhood garden tour could include her house. Mom laughed. The same garden that had supposedly damaged Willow Creek's appearance was now being requested for the garden tour. She agreed. On the day of the tour, people walked through the side gate and asked about Dad's roses. Mom told them which ones he planted, which hydrangea nearly died during a drought, and which fig tree our family thought was finished after an ice storm. Nobody asked whether the shrubs were 3 inches too tall. That was the part Brenda had never understood. A neighborhood can have standards without erasing individuality. A garden can be maintained without looking manufactured, and enforcement can protect property values without becoming a weapon against someone who is older, quieter, or less able to fight back. If you know an elderly homeowner who lives under an HOA, share this story with them, or with the family member who helps manage their paperwork. Save the video if you ever face escalating fines or a lien, because the most important evidence can be painfully ordinary. Dated notices, hearing emails, camera footage, contractor invoices, account ledgers, governing documents, and proof of what work actually happened. And tell me in the comments what you think the board should have done when Mom first fell behind on pruning. Should they have offered a reasonable correction plan, or do you believe strict enforcement was justified? I want to know where you draw that line. If you enjoy property rights stories, where ordinary people defend themselves with documents, professionals, due process, and lawful accountability, instead of reckless revenge, subscribe and share the video. There are a lot more ways a small violation can become a major legal problem when nobody bothers to check the records. Mom still keeps the certified lien release in her metal box, beside Dad's mortgage papers, beside the deed, beside 29 years of property tax receipts. Sometimes I think about the irony. Willow Creek spent months examining her flowers, photographing her shrubs, measuring her landscaping, and calculating every dollar they believed she owed. Then one unsupported invoice forced someone to examine their books with the same intensity. They had a garden handbook. Mom had recorded covenants. They had inspection photos. She had cameras. They had a $23,740 balance. Daniel had the ledger showing how it was built. They had a contractor invoice, and the contractor had never entered the yard. And when the financial records raised tax questions, I did the only thing someone in my position should do. I stepped away. I did not order an audit. I did not choose the auditors. I did not decide how many years they reviewed, and I did not tell anyone what outcome I wanted. The documents did that work. Independent professionals followed them. That is what ultimately protected Mom's victory. Because if I had used my title for revenge, Brenda would have been able to make the entire story about me. Instead, it remained about what the HOA had done. An elderly widow was nearly pushed toward foreclosure over a garden that needed ordinary maintenance. Unsupported charges were added to her account. A lien was built from numbers nobody had properly verified. Related party vendors operated without enough transparency, and a board that demanded perfect compliance from homeowners had neglected its own. Mom did not win because her daughter ran a tax office. She won because she kept every letter, because her camera kept recording, because her lawyer checked the invoice, because an accountant followed the money, because I recused myself, and because once the paperwork reached people with no personal stake in the fight, Willow Creek had to answer the same question it had been asking my mother for months. Can you prove it? They could not prove the work. They could not defend the full balance. They could not justify taking her home. The lien disappeared. The old board disappeared. The garden stayed. And every spring, when those roses climb the porch again, Mom still cuts the first bloom and places it beside my father's photograph. No HOA rule ever mattered more than that.